Hi, it's Lee and welcome to the Tesla Economist. Okay, let's go through the Q4 earnings call. In Elon's opening remarks, he talks about the most common question they've been getting is regarding demand. He says that January is the strongest orders year to date than ever in Tesla's history. Currently, orders are twice what production is. It would seem that Tesla's new prices are potentially below market clearing price now. Elon even saying that they are seeing orders now at 2 times the rate of production. These price drops seem to have generated more than enough demand now. So it'll be interesting to see how deliveries go this quarter. They should be able to hit production of perhaps 450,000, and then there were also vehicles left over from production last quarter. If they achieve that and don't do a gap delivery, then it could be close to 500,000 deliveries for the quarter. Despite this demand surge, we still seem to have vehicles in inventory, and wait times are still around January to March. If demand was this high, then I would have expected to see wait times to increase, or perhaps the website has not yet been updated. However, Model 3 at $36,500 after tax credit does seem very reasonable to me, especially when you factor in the cost savings of electric. Price obviously increases demand dramatically. We still need to work out what sort of margin we're now dealing with. Although Elon says that they are working on dropping the cost of the vehicles in Austin and Berlin, as there are still many inefficiencies there. And I would say after the price cuts that those factories are close to break even now. We hear that there are now 400,000 customers in North America using FSD beta, and safety statistics are very clear. 4680 production is now at 1,000 a week, of which we have already been told, and they have also announced a further capacity of 100 gigawatt hours of 4680s from Giga Nevada, with a massive extension. And then Tesla's goal is still to reach 1,000 gigawatt hours of cells produced internally, presumably still just for the US. This is still a big jump, as they're only at 0.4% of that rate so far, and in my opinion, this is the biggest thing to look out for. They'll also continue to use their suppliers too, so they can scale faster, and have an amazing plan to make 4680 cells lower cost and higher energy density. The higher energy density is essential for the Cybertruck, as it will need a much larger battery to power such a big vehicle, so this is also something that we need to keep an eye on too. Elon says that they want to keep making and selling as many cars as they can, and believe they can achieve strong volume growth, whilst achieving the best operating margins. Tesla still managed to achieve a great operating margin in Q4 despite the lower margins for autos of 16%, and they will continue to aim to be the best at manufacturing. Zach Kirkhorn then talks and mentions that COGS per vehicle has increased on a year-over-year basis due to raw materials and inflation, mainly for lithium. Also, the ramp at Texas and Berlin has added cost due to a lower production number, and lacking economies of scale is pulling down the average margin for the vehicles. Then also the fact that the majority of vehicles are now Model Y, which is a more expensive vehicle to produce. They're doing what they can to mitigate these additional costs. Then we move on to investor questions. A good question was asked regarding credits, and will Tesla be able to take full advantage of them? Elon says how valuable these credits potentially are, mentioning if they do 1,000 gigawatt hours a year, then it will really add up. It'll be $45 billion a year profit, if you were wondering, which would put Tesla on about a P ratio of just over 10 if that was their only profit. We also find out the deal with Panasonic finally when it comes to credits. Tesla and Panasonic are going to be splitting the tax credits. So if Panasonic are producing 35 gigawatt hours a year, then that is about $1.6 billion a year total, and Tesla would receive about 800 million a year from that. Nothing is mentioned about what they expect to receive this year from 4680 credits, but at the current rate of around 4 gigawatt hours a year, then that would mean an additional $180 million a year in credits too. So almost $1 billion a year pure profit potentially from credits alone. And if they ramp up 4680 sales, then obviously even more. But Zach estimates around 150 million to 250 million a quarter in credits this year, and thus they are incentivized to do more manufacturing in the US, which makes sense with all these credits. We then asked a sensible question as to what gross margins and ASPs will be after the price cuts, excluding credits. Will they be under 20% and under $47,000? FYI, that would be $21 billion in revenue for a quarter at the 1.8 million run rate at $47,000 ASP, and $4.2 billion in gross profit for autos at that margin and ASP. Q4 was $5.3 billion in gross profit after tax credits. Zach says that they expect the margin and ASPs to be higher than that. I'll do some numbers though to see what it comes to. My last estimate I did was a margin of 20.1% and ASP of 47,600, which would agree with that. However, I'll do another update after the latest earnings report. Then Elon plugs Twitter for a while and tells everyone how many people interact with him. Then we have another good question asked about where they are with the 4680 ramp. What are the current roadblocks? And when do they expect enough sales to hit 10,000 units a week? Great, my kind of question. Drew answers this and congratulates the team. We hear that one of the 4 lines at Texas is now in production. I believe this may be the first time we've officially been told this. The other 3 are still being installed. We're hoping these lines to potentially make a more energy-dense version of 4680s, which should also be suitable for the Cybertruck, presumably with silicon in the anode. As a result, they're hoping for a major 4680 year in 2024. Hopefully up to that milestone of 100 gigawatt hours a year run rate, although we aren't given a date as to when they expect to hit 10,000 a week rate, nor are we told what the roadblocks are, which might potentially still be the dry battery electrode process for the cathode. Then we're asked when production for Cybertruck will start, and supposedly still this summer. But we are to expect initial production to be very slow, and Elon says what's more important is when does volume production happen, and Elon is now saying next year, which is new. In the past, he has been saying the end of this year it would hit volume production. So Cybertruck production appears to be somewhat delayed. He just says next year, not early next year or any specific time of the year, but I'm sure we'll get another update sometime, as everyone always wants to know about the Cybertruck. We're then asked about the 1.8 million a year guidance, whether it's demand or supply constrained. Elon says the internal production potentially is actually closer to 2 million vehicles, which I think is really about the run rate they're at now, with about 1 million from Shanghai, 600,000 from Fremont, and the 2 factories doing 3,500 a week each, would take the total to 1.95 million production rate. So this is the number I'm struggling with. I don't quite understand why there wouldn't be any increase in production if they can ramp the 4680s this year. Or perhaps it's just taking that long to get the production rate going for them, and like they said, 2024 will be the year of the 4680s. On the other hand, many people think they are simply sandbagging. Elon says that he's just trying to be realistic with 1.8 million, as there's always something like supply chain issues, and if it could be a smooth year, they could potentially produce 2 million cars this year, and there should be the demand for it too. Elon's asked about what indication of the headwind they're getting from Berlin and Austin in ramping, and the investment cost per kilowatt hour is less than half seen anywhere else. Elon doesn't want to say the specific number, but just to look at the size difference of the 2170 factory that makes 35 gigawatt hours compared to the 4680 factory, which will make 100 gigawatt hours a year. It's a small fraction of the size. Elon doesn't mention what the headwinds are for the new factories, but I believe they are still limited by cell capacity. For example, he just said they only make 35 gigawatt hours a year of 2170 cells in Nevada, which is enough cells for around 430,000 Model Ys a year. If Fremont is doing 250,000 a year, then that only leaves 180,000 for Texas, which is exactly 3,500 Model Ys a week, which is about the current run rate. So that adds up. Of course, there are an additional 1,000 a week 4680 vehicles potentially on top of that too. Elon then talks about the other products that they're working on and how they'll potentially blow people's minds when they reveal them. Alright, we'll go through the rest of the call on another video. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.